So this is really interesting because you can see a great illustration here of what cycle analysis looks like, our version of that, and with some of our proprietary indicators on here. And you can see what we're looking at on the bottom are, well, those arches. And I always talk about this first because if you're brand new, you're not going to understand what this is. This is a drawing tool. And what that helps us is to see the energies in the market, where there would be a rising phase and where there would be a peaking phase and a declining phase. The actual cycles are up here, with these blue lines up here are how they resolve themselves or how they translated from the what would be the ideal that's on the bottom. And you can see also we have the slim ribbon in here, and when that is configured on in a positive way, where the short term is above the intermediate term and above the longer term of the three moving averages in there, then what it does is it turns our slim ribbon PO green. And the up arrows tell you when it's likely to get a resumption in that particular direction. So here you see all those red arrows as the market was moving down, and it was warning you about negative resumptions. You've had the same thing going on right over here, and as the market has turned up, it has not yet been able to turn blue, which would be neutral, though it's very close to doing that right now. So that is a look at the slim ribbon PO on the bottom. Now let's go back to the cycle analysis as to where we are right now. So I'm going to take a little closer look in here and just look at these last few cycles. So you see these vertical blue lines, that shows you where the cycle had bottomed in there. And what we're looking at for people that are new are cyclical harmonics. That's what these harmonic families are. And this has a dominant cycle that is running around 27 days on average, with minor cycles that are 8-9 days that are coming in there. As a matter of fact, you can see pretty clearly an 8-day cycle, a 9-day cycle, a 9-day cycle right there. And now note this first minor cycle. This is forming in a positive way. The slim ribbon is about to neutralize in here, so it's getting close, as the market now here on Friday is on its highs for the day, with the S&Ps up 56. So you could see it got down here to this minor 38.2% support and then began to move up. This indicates to us, as we are now about 7 days off of this low, that this, if it were to pull back again in here in these next couple days, these minor supports are really likely to hold, and then it begin moving up again. This is supportive of what we believe is an intermediate low that's formed. We're likely to have the upward movement get up and test this intermediate 50% right there. It's actually a short-term 50% that is up there right around 3,800. The top of this, or the 61.8%, is just over 3,900, which is a very reasonable place for it to move up to over this next time period. So you can see in here that this cycle points to an upward move and then a corrective phase over here. These yellow areas are where the biggest downside risk is. That's where the nesting is, right here and right here. And you can see that the next one that we're going to have where there's a period of risk is somewhere out over here. But it probably will be a market that is fairly strong and not give enough downside to take out this low. Were that to happen, of course, then you would have the next rising phase coming right out over here. And we talked about this upward correction, positive correction in a bear market, likely coming out into December, and this is where that comes from. As long as we hold above this level at 34.9158, then it's really in good shape. We would get a warning if we start getting under 35.95, which doesn't exactly look like it's going to be happening in here. So we have a market that is starting to form a bottom, but it's really not doing everything that we'd like to see yet. To make that bottom, we'd need to see the momentum conditions starting to improve. So what I want to do is I want to go to back to our website. Here's where I was showing you the look at the videos that are in level 2. But now where I am here is in our in the hub. Now I'm of course a full member looking at everything, and you can see on here these are requests from our level 4 members for charts on all of these stocks in there. So if you're a level 4 plus member, you can request 2 custom sets of charts per week and get all of our analysis. As you see right here in Valet, somebody had requested get for that particular analysis, and then that analysis is done by our team and it is sent to them. What I really want to do is go to chart streams right over here, because of course we're looking at the stock market, and for level 3 and 4 members, you get all of these live charts with all of our analysis running on there. For level 2 members, which is included in our special that we're running right now, you get the SIR intraday and you get this S&P 500 multiple time frame analysis. So what I'm doing is hitting that and blowing it up, and now this is live, as you could see right here. I'm just clicking that and going live. And this is us broadcasting right now with our proprietary indicators in there. So like I said, the market needs to do more work in here. It needs to change some of these negative momentum conditions to positive. This is the weekly, which we don't really show the whole chart of. We just want you to see our reversal scout in there, which is still exhibiting a lot of downward pressure on the market. When that happens, you're likely to run into trouble in the resistances on the daily chart. Again, here is the slim ribbon PO right there, giving those negative signals and not neutralizing yet. So it's still giving signals that are looking somewhat negative. Let me just move this up here a little bit so that you can see on the bottom. Let's see if I can get that a little higher. On the bottom, and here you see these red dots. That is the option bias indicator, which is still giving negative conditions. Now, it's important to understand that we look at shorter term intraday, and that's where we're going to start to see things improve first. And you can see in here the slim ribbon PO now is giving bullish signals, as you see right over there, though the market condition indicator on the bottom is still minus 75. It needs to get over plus 25 to be positive, so that has a long way to go. Still, again, we need to see a lot of work for this market to get positive. So beginning signs of it getting positive right over here, as you can see. And right over here, this is reflective of the SIR live stream looking at the S&P 500. And you can see in here as it moved up easily through these yellow zones. Those are the acceleration zones, and this is the dark red where it got up there and started to stall today, and that is the reason for that is that, let me get this a little closer in here so you can see that right there. Sorry. The reason for that is that it's a very heavy resistance area that the market is probably going to struggle in. So at the top of that right over there is 37.24, and if the S&P 500 got through that, it would enter the next acceleration zone. So this is a key level right over there that it got to 30. It's right now 37.15 on the cash index, and this is 37.24. If it gets through there, it gets to the next acceleration zone, and likely to be moving up quite sharply, as you can see. So this is important as we look at the sum of the evidence, and that is on the bottom in here, you see that the option bias indicator is still red and negative. The slim ribbon PO is still red and negative. The askSlim market condition indicator is down here at minus 75 and negative. But the signs are starting to show that there's a bottoming going on. These things have to improve in order to get some decent movement that we're looking for up into December. So if you want to get this live, all you have to do is become a level 2 member. We give the S&P 500 make that available to level 2 members. So if you take our special right now, you will be able to get that. So I wanted to show you that right now because it's so important to this analysis. The market is trying to do what it needs to get to turn more positive, but it's not there yet. and we can see some continued back and filling until that starts to happen. So again, here's the S&P 500 on the daily chart, and we're looking for probably a pretty good range right now, somewhere down in this area of 3650 on the bottom side, and then 3800 with a potential for 3900 over here on this short-term analysis on the upside. That kind of is what we're looking for in the range, and that should give some pretty good choppy trading as we're seeing right now for shorter term traders. Overall, we think it is a bottoming process going on in the intermediate term that probably has a decent couple of months ahead where the market tries to do better. All along, that has been our projection from the very beginning of the year that Q4 would look a little better in a bear market year.